Ladies and gentlemen, we're still at the Supply Chain and National Capacity Summit 2024, and now after the first presentation, it's time to adjourn to the next session. Next, we're going to discuss further regarding the long-term planning LTP.
Yes, and for that, we would like to invite the Deputy for Explorations, Development and Work Area Management SKK Migas, Mr. Benny Lubiantara. Let's give a round of applause.
Ladies and gentlemen, colleagues, Assalamualaikum warahmatullahi wabarakatuh. Good morning. First of all, I think I would like to thanks to the committee. It is really an honor for me to talk in this prestigious event. I would like to take this opportunity also to share, actually to update regarding the long-term plan. More importantly, on the role of the supply chains and national capacity in supporting the LTP and energy resilience. Is it? Okay, let me begin with this slide. I think most of you have seen this slide before, yeah? This is the original LTP. We made, the SKK Migas made it back in 2019. And at least there are two messages that I would like to deliver using this slide, yeah? First, the gap. As you can see, there is the gap between what we initially planned, what was initially planned, and the realization. For the oil, for example, if you can see, there is around 100,000 barrel oil per day gap. For the gas, it's around 1.2 BCF per day gap. Yeah. There is a gap. That's the first message there. If we compare between what we plan and the reality. Bear in mind in that during the period from 2000 to 2020 to 2023, there was a pandemic. We remember at that time there was a policy for limitation of the large gas activity. Like it or not, it really impact all of the industry, including our oil and gas industry. So there were many project delay during that period. So the main reason maybe, even though not the only reason, the pandemic was the reason of the project delay. And the second thing that I wanted to deliver using this slide is that, you see that for the oil, on the left side, EOR and exploration plays very important role. Without EOR contribution and EOR, basically we could not achieve our target. For the gas, on the right side, since the gas, we have no EOR layer, exploration is very important. Okay, and then the following slide, I would like to share the opportunities, not only the opportunity, but also the challenge to achieve our LTP. This slide also, I believe many of you have seen this before. This morning, Pak Luhut also, so similar message basically. Indonesia, we are a big country. We are the largest archipelago country. So it is no doubt that we have abundant resources. But the issue is not about the availability, because we believe, we have the resources down there. The issue more on the deliverability. How do we monetize? How do we live? Or how do we produce the resource, including oil and gas resource, economically? So the message here is deliverability. I will elaborate later, and not the availability. Now let me share the exploration activity in open area. As you can see here, it is very important. This is the initial step for massive exploration. So we need to have the data in open area. This is the activities starting from the seismic. We have seismic acquisition, we have GNG study, and also aerogravity magnetic using the airplane, like full tensor gravity, etc. The red color basically represent the ongoing activities now. So after this, activities, the deliverable basically later we will expect that we will offer the block, whether in the form of joint study or also using the tender block later. And then after that, when the block award did to the oil companies, oil and gas companies, so we expect to start to have the massive exploration. This is the exploration activities from 2020 to 2023. Why we took that period? Because, when we launched the long-term plan back in 2019, we would like to see what is the performance of the exploration after we launched the LTP 2019. So we'll see the last 4 years, from 2020 to 2023, there are some hydrocarbon discovery. You remember back in 2022, for example, Timpan was discovered by Harbor Energy, and also last year, 2023, we discovered significant resources in East Kalimantan, which is Gang North by ENI, and also South Andaman, we had Layaran 1 in 2023. We don't see the Tangkulo here because Tangkulo, we remember, discovered early this year, which is in 2024. So that's why we don't see Tangkulo discovery, even though Tangkulo was one of the biggest discovered this year, since it is discovered early this year. We will update later after we finish 2024 regarding the result of the exploration discovery. Okay. After we after we had the hydrocarbon discovery, of course, after that we need to continue with the development plan. So this is the development plan that we approved by the minister, by the government, by the SKK Migas during the period of 2020 to 2023. So again, you don't see Masela here because Masela was approved in 2019. And of course, you don't see Gang North and Andaman, South Andaman POD, because both POD are expected to be approved this year. Maybe Gang North will be approved very soon. And after that, before the end of this year, we expect to approve the POD from South Andaman. Both big discovery, of course, not showing in this slide. Total from say 60 project, the total additional reserves actually around 10.9 TCF. This is for gas, and then this is for oil. This is the same period basically. This is for oil. If we look at the location in the map, most of the POD, most of the OPL or field optimization project are located in the western part of Indonesia for the oil. With total around during the period, the additional reserve is around 780 million barrel oil. This is the reserve replacement ratio. Sorry for smaller, quite small figure. The upper one actually in terms of percentage. We break down oil, the red color, the green color actually for the oil, and then the red color is for the gas, and then the blue combined in barrel oil equivalent. As you can see in barrel equivalent, the last, say, 6 years is always more than 100%. But if we look at the detail, we break down oil and gas, actually, gas is much higher in terms of reserve replacement ratio than oil. The lower figure in terms of the volume, as you can see also, it's big volume in 2019. It was contributed by the Masela approval at the time with the significant additional reserve. So based on this figure, we know that for gas, in order to achieve our LTP target, looks easier than for oil. If we try to calculate here, simply, the average, if we convert this average to barrel oil per day for oil and gas in BCF per day, so we will end up, for example, for oil is around 700,000 barrel oil per day. This is the thing that we already have in our pocket actually, because this is the reserve. This is based on our approval of the POD. For the gas, the figure is better because we are in the range of 10 to 12 BCF per day. So basically, what I need to deliver the message is that this is the figure that we already had in our pocket, even though it is not guaranteed that it will be achieved, but the volume is there, the approval is there, this is already reserved. Our homework is to make sure it will be executed on time, as per what we agreed in the POD approval. EOR, we have many potential EOR projects. This is the distribution in our country. Minas, of course, this is chemical, for chemical EOR. Minas one of the biggest volume for the chemical EOR. We thought contribution of the EOR, again, as I mentioned in my second slide, it is almost impossible to achieve our target for the oil. So therefore, it is very important to make sure that the EOR project will be executed. We understand that it is actually not easy to execute EOR. So one of the idea that we consider with our colleagues from Pertamina and from other contractors as well, to consider for strategic alliances with other companies that have experience and also, technical experience and also financial strength to collaborate in developing the EOR opportunities in Indonesia. With that, we hope the EOR can be implemented in Indonesia with having the strategic alliances, whatever we call it later, or partnership with the company that had significant experience in implementing EOR around the world. This is, beside chemical EOR, of course, we also have other based on our identification, we have potential for steam, especially in the central Sumatra, and also CO2 EOR. This is just the figure. I would like to take these opportunities to share our 3 scenarios. Actually, this is fresh from the open, actually, introducing the 3 scenarios. We presented early this month during the Oil and Gas CEO Forum. I think it is important now to show, when we created the outlook, not only only one scenario. I believe it is good, we believe it is good to show the complete picture of our outlook. So therefore, we introduced the 3 scenarios. The highest scenario basically represent the full potential of our reserve or resources. And then we also created 2 other scenarios, which is what we call it low and mid case. The difference basically only coming from, this is for oil, for example, coming from the last 2 layers actually, because the bottom layers, we understand the uncertainty is quite okay, but the last 2 layers, EOR and explorations, uncertainty is still quite high. So therefore, we consider it is good if we introduce not only one scenario. So therefore, we use 3 scenarios. In the low case, basically for the EOR, we only use the EOR project that already have, or secured approval already. We drop the EOR, for example, in the previous slide, I show you the potential EOR, including the potential EOR that located in the offshore. In the low case, we drop all of the EOR project offshore. So that makes the difference. For the exploration, also for the low case, we apply, lower probability of success for low, mid, and high. So if you look at the 3 scenarios here, the highest case, which is basically our original case, but updated with the current situation, delay due to pandemic, etc., etc. So we end up with, say, around 990, almost, not 1 million, 990 in 2032. For the mid case, we have 840 in 2032, and then for the low case, around 750 barrel oil per day, say, in 2032. If you look at the figure before, the reserve replacement ratio, the volume, the thing that we approved, the POD that we approved, that already in our pocket, I think in the low case, the figure more or less the same. It's around 700 or 750 barrel oil per day could be achieved. How about the gas? This is for the gas. For the gas, we don't have a layer EOR or water flood. So now only exploration. The difference between the cases, low, mid, and high, actually only came from the exploration activities. So we apply smaller probability of success for low case, medium, and high case. But interestingly here, if we compare, the range between the low and high case actually is not as big compared to oil. Here, the low case, we end up with, say, 9.9 or almost 10 BCF per day. Meanwhile, in the high case, we end up with 11, almost 11. Let's round it up to 11 BCF per day. So less than 1 BCF per day difference between the low and high cases. Okay, now, after showing the opportunities, no, I think it is good during this event, during this forum, to discuss the challenge. We know the oil and gas industry in Indonesia is the contribution of oil and gas industry in Indonesia more than a century. So we all understand in this industry that we have mature, we have old fields, we have mature fields. It is actually not easy, managing the mature fields. This is the challenge, In the past, maybe if we drill one well, for example, some years ago, we may end up with 10,000 or 20,000 barrels per day only using one well. But now, in order to get the same volume, you may need 5, 4 wells. So cost increase, actually. In order to get the same volume, we need to drill more. It is very important to understand, and it is quite difficult to understand by people who are not in this industry, The question is, why price or cost increase, why your production continue declining? The issue, because we are managing the mature reservoir, mature fields. And also for the mature fields, we have a stranded area also. It is not easy to develop a smaller field in the stranded areas. At the same time, of course, we had more than 100 years in this industry. We had some aging issue on the aging facilities as well. Besides the issue of the mature field, at the same time, term and condition of fiscal is also an issue. So no significant upstream fiscal improvements for almost the last 30 years. Significant, yeah, because in the past, I remember back in late 1980s to early 1990s, the government at the time introduced or issued the incentive package, the consecutive 4 incentive package, which is, radical improvement. But after that, we don't see the improvement, Okay, and also, the poor gross split term and condition for termination and extension block also have an issue, because now with the block that are using the gross split with their current term and condition, they are having economic issues. They cannot produce, they cannot continue the investment with their term and current term and condition. They need significant change. So it is no wonder if you look at in the newspaper, the news, that most of them with the gross split contract, they are proposing to move back to the cost recovery schemes. Okay. This is my, I think this is also important slide, especially related to our discussion regarding the supply chain and national capacities. We know that the project economic will depend on at least 4 parameters, like volume, which is reserve estimation, and upstream fiscal, of course, oil and gas price, we know it, and of course the cost of goods and services. We know that already, yeah. But at the same time, we are facing a new challenge, because we are entering the transition, the energy transition era, with some implication, like capital investment competition is getting higher within the companies, within the corporations. Financing risk increase actually, so therefore the project, they need the minimum attractive rate of return, or MAR, increase. And at the same time, energy transition, we need the additional scope for CCS, CCUS. It's also cost. Having cost of course will increase. So what is the role of supply chains management in this, Because I think we need to do our homework, both our homework, because from the governments, the homework is improving the upstream fiscal regimes. It is very glad to, to hear the presentation from Pak Luhut this morning, which is, we are all agree, we need to have a radical change in the fiscal, But at the same time, from the industry, in order to improve the economic, because maybe we are facing, we are mature field, we are having a smaller volume. At the same time, fiscal, maybe the current term and condition fiscal may not help. So that's the work of the government, SKK Migas, and also the Jen Migas, to improve. But at the same time, from your side, to make sure that the cost is optimum. Optimum, not necessarily cheap, but the cost is optimum in order to have the project economics. But one important aspect also, which is very important as well, is that everybody knows, especially in oil and gas industry, is time is money. Because what? When the project is delayed, say 1 year or 2 years, the implication of the economic is very significant in our industry. For example, if we assume our project will on stream, say in 2025, with some certain indicator, economic indicator, IRA 8%, etc. And then when in reality we're having a problem, and then our on stream delay, say for 1 or 2 years, the implication is very significant to IRR, the contractor IRR especially. So therefore, it is very important to make sure we have no more delay, because delay will significantly impact the economic of the project. This is my last slide, actually. actually summarize my point. Let me read it. The potential reserve and resource have been identified, I mentioned before, to reach medium and long-term target. We expect no further delay, because delay is the enemy of achieving LTP target. So to ensure the product's target will be achieved, at least we will reach a positive trend. Secondly, increasing national capacity, we are all aware, is a very important indicator, which is one of the elements of multiplier effects. And the third, which is, we discuss a lot, but I think we need to find a way. It is necessary to introduce multiplier effects as an additional measure of government take, beside a conventional view which is taken simply from portion of oil and gas produce. Because now our government takes, in terms of percentage from the gross revenue, become lower and lower because the complex issues mentioned earlier in my slide. So I think we cannot, again, using the government take is only indicator. I think we need to add that even now the government get a smaller take from the oil and gas produce, but at the same time there is big multiplier effect, provided by the industry to the government. We need to think about incorporating the multiplier effects as well as an indicator, not solely on the government take. The third one, I mentioned in my previous slide, recently many projects need additional incentives to achieve minimum economic threshold. Therefore, fiscal improvements continue need to be done, radical one, because we are facing a more competitive era now. But at the same time, cost optimization is also very crucial to ensure the project remain competitive. Last, strong energy resilience require assurance of timely supply. Therefore, effective and efficient supply chains mechanisms is very crucial to ensure future project delay will be minimized. With that, I thank you. Assalamualaikum warahmatullahi wabarakatuh.
Thank you. Thank you, Mr. Benny Lubiantara, for the presentations.
Please remain on the stage as we would like to present you with a token of appreciation, and therefore we would like to invite Mr. Bayu Kusuma as the Vice President Supply Chain Management of PT Pertamina EP Region.